What are the sexiest, best assets that you could actually be investing in right now? That's what I brought on our special guest, Sharon Lechter, to talk about today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You've worked so hard for your money, and you're now ready for your money to start working harder for you today. You want that freedom of cash flow right now. You want to become work optional, where you work because you want to, not because you have to, because you have enough passive income coming in to allow you to live the life of your dreams, but not just to get rich, but allow you to live a rich life. Because as you're blessed financially, you can now create a greater ripple effect through the lives of those around you and bless their lives. That is what I'm here to do for you guys today. Thank you for tuning in. Guys, we're now going on pushing over 930 episodes of this show in our 11th season now. Thank you so much for tuning in and being a part of this movement, because we could not ever do this without you. In fact, for that reason, please, if you feel like passing it on, paying it forward, please share this episode with somebody else that you think would love to hear more about sexy assets. All right, guys, so I'm bringing on a guest that I am so excited to have on. I know a lot of times we refer to like things like rich dad, poor dad. We talk about passive income and financial freedom. Well, guess what? We have the mastermind behind Rich Dad, Poor Dad. We have Sharon Lechter, who's the co-author of the book Rich Dad, Poor Dad, which we'll talk about a little bit today about that little interesting story too. But guys, so excited to have Sharon Lechter here, because not only is she a brilliant person when it comes to money, she has been someone who's advised even presidents and administrations on financial literacy for people around the world, and especially around this country, children as well. Just best-selling author, of course, and just so excited to have her on today to talk about what are the best assets that you could be in. What are the assets that maybe financial advisors won't talk to you about? That's what we're going to talk to you about today. So, Sharon, welcome to our show.
Thank you, Chris. I'm delighted to be with you, and I love your messaging. I think we're very much aligned in helping people take control of their financial lives.
Well, take us back for you, Sharon. Like what, I mean, even previous 1990s. I know you have a very interesting entrepreneur background. I know when we had dinner, we talked a little bit about this, about the time before you moved to Mesa. Tell us more. Like, what was your background? Because I know you have an invention that's, I think a lot of our people would know about.
Well, thank you very much, Chris. Yeah, I actually started, I lived in an entrepreneurial home. We lived in a small house between my mom's beauty shop and my dad's used car lot. We
Mhm.
had rental properties. I've been a real estate investor since I was 10, I say, because I was cleaning out properties between tenants. And we had orange groves where my dad had told me cash flow comes from the oranges every year. And those orange groves, some of them are now under SeaWorld in Florida. So those are things that I just grew up hearing at the dinner table, and I didn't realize how unique and what an awesome opportunity that was for me until I got out into the real world. But I was embarrassed where we lived because my parents were investing in assets, not things, and not things to toys. So they were investing in assets. And when I got out into the real world where I wanted to be a sophisticated professional, I was the first generation to go to college, very first women to go into public accounting, only woman in my business classes.
Wow.
And I arrived, but at the ripe old age of 25, I wasn't in control of my life. I was working incredibly long hours. I was successful, but my life was out of control.
Mhm.
And I had one of my clients offer me to go into an entrepreneurial endeavor with him. And I thought, oh, I get to own a piece of the rock. So I kind of looked at it. Well, I was very successful where I was. I have this opportunity, this unknown. And I kind of, in my brain, just took over and said, why not? Why not do something different? Why not take the path less traveled? Why not solve a problem or serve a need? The most successful businesses solve problems and serve needs. So I had incredible training in public accounting. I saw how businesses succeeded. More importantly, I saw how businesses failed. And all of that gave me this foundation of realizing that I had this gift of knowledge that most people didn't have. We chase money. We're chasing, if you're familiar with my second book, Cash Flow Quadrant in the Rich Dad series, we're taught to be employees or self-employed. And there's so much more to life. And if you want financial freedom, you have to focus on assets. My favorite word, assets. And so that's my superpower. I help people understand how to buy, build, and create income producing assets because financial freedom comes when the income from your assets exceeds your monthly expenses. That means you're financially free and you have your time back.
It almost sounds like you grew up with the rich dad.
I did, absolutely. And his teachings with me are throughout all the books I've written. I was given a really huge gift. And
Yeah.
so when I did that, I met my husband. I kept looking for new things that could create that path less traveled. And I
Mhm.
think you might have mentioned the fact that I started the talking children's book industry, books that had sound strips down the side. They didn't exist. In 1987, we started that industry and grew it around the world, and it helped me learn all kinds of things about technology and power of association because we had this new technology. Back then, kids, it's hard to believe dinosaur days, didn't have any screens or technology.
Yeah.
So we said, how can we get parents to trust us? And that was when we did deals with little companies like Disney, Warner Brothers, Sesame Street. And that allowed us to explode that technology and that company around the world. So that was my very first global brand. And then with Rich Dad, I had that knowledge and that experience that I could apply to getting the Rich Dad messaging around the world as well.
Tell us, how did that story come about? How did you guys, align together in creating
Well,
that brand?
I'm driving down the road one day and my husband calls me. Mike is an intellectual property attorney, and this guy had walked into his office with this idea for a board game drawn out on a piece of butcher block paper and his shorts and t-shirts. And he wanted to talk to Mike about patenting it because that was his specialty. And he knew I was already working with schools to try and get financial education in school systems. And he said, you
Mhm.
have to be my wife. And so we met and I fell in love with the game concept, but he didn't have the experience that I did. So I said, I just volunteered to help him commercialize the game. And during that process, he told me he was going to charge $200 for the board game. I said, well, that's kind of pricey. We're talking
Mhm.
1996. That's kind of pricey.
Yeah.
Maybe you should write a brochure that explains your philosophy so people are willing to invest that kind of money into this educational tool. And that's when he asked me to be his partner. And we wrote this brochure and it was called Rich Dad, Poor Dad. So
Mm.
we never expected it to take on a life of its own. We never expected to write more than one book. And all of a sudden the world said, no, no, no. So then we said, well, we'll write a trilogy, Rich Dad, Poor Dad, Cash Flow Quiet Rich Dad's Guide to Investing. And we'll be done.
Yeah.
No, no. During our 10 years, we wrote 15 books together, and then I launched the Rich Dad Advisor series for another dozen or so books. So we became a publishing empire. But in the process, we built the world's largest personal finance brand. And this was before Amazon, believe it or not, and
Mhm.
before the internet. It's because people read the book, found value, and told other people about it.
Yeah. That's true. And I remember Oprah was the thing that kind of helped really take it to meteoric levels, wasn't it?
Yeah, we were successful. And we actually, my husband and I published it through our publishing company for the first couple of years.
Hmm.
And then we made it to the New York Times bestseller list, Wall Street Journal at the time, Business Week. Oh, some of those lists are no longer around, but
Yeah.
and that's when most of the major publishers started coming to us and deciding, well, maybe we should be talking to you about publishing this book. And so it was in 2000. We published originally in April of 97. And in 2000, March and April is when Warner Books stepped in to help us, and we were on Oprah in April of 2000.
Yeah. Incredible. Well, incredible to think that was only 25 years ago, isn't it?
I know it's hard for me to imagine it's been that long, but I have the white hair to prove it.
Well, I can speak for everybody in our audience. I mean, we definitely appreciate the value put into that because I know I can't tell you how many times I've talked to people, especially in the real estate space, where they attribute the beginning of their journey of what's possible to that book. And I know you were really the author of that book too. So, thank you again for doing that.
Well, it's my pleasure and my honor, and it just delights me to see how people have taken ownership and done things with it. Because a lot of people read the book and never did anything, and
True.
so people come up to me all the time, Chris, and say, "You changed my life," or "Rich Dad Poor Dad changed my life," and I always stop them, and I go, Thank you so much. I'm so happy that something I wrote inspired you to change your life. But you
Hmm.
need to own the fact that you took action. Out of 36 million books sold, we don't have 36 million millionaires. We
Right.
have people who read it and took action. So I want people to stand in their own power and be proud of themselves for having taken action and taken control of their financial lives. Because when it comes to money, you're either in control of your money or it's in control of you.
That's so true. Now, this kind of segues into really what we're talking about, these sexy assets, right? Because, I first read the book, I think it was 2000, I want to say it was 2002. In fact, when I first read it, it was when I became a financial advisor. They said, you should read Rich Dad, Poor Dad, and they teach everything that we support, which was total BS. I found out later because when I read it from non-financial advisor eyes, that's when I actually made more money. Um, and I know you think about this too, because financial advisors, when they talk to you about investing, it's very different than how we talk about investing, isn't it, Sharon?
Well, absolutely. Financial advisors talk about, you know, diversifying your portfolio, but
Hmm.
they're talking about paper assets, diversify between stocks, bonds, mutual funds. And it's like, wait, time out. There are a lot of asset categories. There's paper assets, stocks, bonds, mutual funds, real estate, businesses, intellectual property, commodities,
Hmm.
digital currency now. All of those asset categories are valid based on your own circumstance. And you want to truly diversify and protect yourself from the volatility we've seen in the market, diversify across those asset categories.
Right. So what would you say right now? Like, what are those sexy assets necessarily, right? Like, let's go a little bit deeper because I agree with you wholeheartedly. I've told people so many times that when people talk about diversification, they usually just mean among a small category of what financial advisors can sell. But a lot of people are like, well, how do I even get access to these kind of deals, right?
Well, it's important to understand what your goals are, what you want, what your risk tolerance is,
Hmm.
what your situation in life is. Are you a 25-year-old person without kids, so you can take a lot more risk, or are you in your 60s and you have families and you have, a lot of property already? Your risk tolerance is going to get less and less as you get older. And so
Yeah.
it's really important to have that mentor with you. Doesn't necessarily have to be a financial advisor, but somebody who's been there, done that can help you make the right decisions for you and your family. That's very, very important. Don't just take somebody's, elevator hint and
Mhm.
tip and think you have to do that. Make sure it applies to what you want. And when you're looking at a volatile market, one of the things that I tell people right now is you've got to really pay attention to what's happening, and you need to really check in all the time on what's happening in the market, because the market's going to run over you if you don't pay attention. And I've started doing a monthly course where I talk about what's happening in the market so people can make adjustments to their portfolio. But over the last year or so, when things got so volatile, I went back old school, the 5 Gs, right?
Mhm.
Ground, real estate, grub, food, all right? Gold, because when there's volatility, gold goes up. Guns, when there's volatility, people buy guns. And then gas, electricity, power. Those 5 Gs are kind of staples. We got to have them no matter what's happening in the world. And so be prepared to focus on where your investments are. When we saw, tech stock has always been great until it wasn't
Mhm.
starting to come back. So you have to pay attention. You have to stay in the know or find a resource that you can plug into to figure out what you need to do quickly so that you don't get run over by the market.
And I know just to, what make sure we do give it some credit as well. You mentioned like you're doing this monthly newsletter, right? Um, Now that's I believe that's sharonlechter.com/money dash talks. Is that correct?
Yes, it's actually a monthly webinar
Oh,
where
webinar. Okay.
it's a webinar that I do live, and I literally, up to the moment before I started, I'm checking in the data and talking about what's happening in the markets. I talk about every asset category, from the housing market to commercial real estate to cryptocurrencies, including Bitcoin. We're looking at gold and silver, looking at alternative investments as to what's happening in the market, because things change very, very quickly. Just look, things can go from the top to the bottom in a day. and back. So it's important to be on top of what's happening. And that's when all this started happening over about 2 years ago. I started this monthly Let's Talk Money. And it's near the end of every single month. And it's a live presentation for people to really be able to plug in and know that what I'm talking about is actual movement in each of those categories every month.
It's pretty much the places that you're looking at for yourself, right? For your own money as well.
I talk about the moves I'm making, the exact moves that I'm making.
Yeah.
I plug into my experts because you need to know that. And I'm not selling anything to you. I'm not selling you a piece of real estate. I'm not selling you a stock. I'm giving you valuable information and education so that you can make the determination as to what you need to do.
If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. I love it. Well, that one question I would like to ask you, especially because you might know her, Anna Kelly, REI mom, Anna Kelly. I know we're in some groups together with her, and I was talking to her recently on our podcast, and she was saying she loves to hear from people that have been around longer than us, right? Because where most of my investing experience is really from about 2000 on, and same thing with hers, about 1990s and so on. But she said, I wish I could talk to more people that were, not just around, but they were investing even in the 1970s and the 1980s, especially when it's kind of similar to today. From your perspective, Sharon, like what are you seeing right now? I mean, because do you see something being like what you saw maybe, about 40 plus years ago, or is this something you see that's quite a bit different?
Well, that's a great question, Chris, and I'm so happy that you asked it because a lot of people, for instance, are comparing the real estate market to what was in 2008, and they're completely different. In
Oh yeah.
2008, there was predatory lending, and the housing market people were over leveraged in their homes. Today, close to 60% of homes in our country, in the United States, have still under 4% mortgages.
Yeah.
And many of those are paid off. They're mortgage free. So there's a tremendous amount of equity. So yes, we have an issue with we have sellers still wanting to too high a price, buyers still not able to do it because of the interest rates. So there's still this tension in the market, but there isn't that underlying house of cards because the market is there. The problem is sellers are saying, well, if I sell, where am I going to go? I own my house. I don't have any debt. If I sell it, I'm going to have to get debt to buy another one at a higher interest rate. And so they're making the decision to stay put. There's tremendous number of homes on the market, but that tension is there. And so we're not seeing that move yet. I think we'll start seeing some more movement before the end of the year. But that's where, I've been around and investing since probably, the 60s. As a kid, but I started my career in 1976. So I'm one of those people that have been around. And as I tell everyone, it's all the numbers. Even when the interest rate was 16, 17%, I was making money on real estate because it's in your numbers. You got to do the numbers. You got to calculate it. And so it's not just the interest rate that's a problem. You have to know what you're doing. You have to study. You have to pay attention to who you're listening to. Because we got into this world of a lot of small investors that are bringing people's money in and they don't know what they're doing and they lose their shirts, they lose their investors' money. And so you really need to be in charge of your own destiny and do your due diligence. Make sure the people that you're listening to, make sure the people that you're investing with have a track record and have earned the right to talk to you about money. Make sure they've done the right legal work to protect you as well as them, as well as the property. Same thing for companies as well. Make sure that they've done the work they need to protect their company.
That's right. I know for us, like when we have a VIP consulting program for our clients to help them, even find deals and whatnot. And often we'll talk to them saying, find somebody who's been through at least one full market cycle. So really, at least minimum 15 years of experience. They probably have gray hairs, if not from getting their teeth kicked in from the last, market corrections, at least the recent ones too, and not somebody who just showed up in the last few years. It reminds me of like a lot of kids that came out, saying in 2018, "Hey, I can make money in real estate." And my answer was, well, so did everybody and their dog, right? It's like, give me somebody who made money in real estate even when others weren't.
And, the question is, are you going to sell low and buy high? Because that's what
Mhm.
happens. There's so much emotion in investing, Chris. I
Yeah.
talk all the time. I say, high emotion is low intelligence. And
Mhm.
that's what you see when it comes to investors and their money. They get really nervous. That's why there's a ton of money sitting on the sidelines still. People are afraid to enter the market because the fear is keeping them back. And you miss opportunities that way. But it's important to understand that you put the emotion aside and look at the numbers, study the results, the people that you want to invest with, study what their track record is. What have they historically made on properties? Don't just look at their pro forma, because I've never seen a pro forma that wasn't perfect, that wasn't telling you you're going to make a ton of money in 3 years. Look at the numbers, look at other historical numbers from from that team.
Oh, such a good advice. What I want to ask you one question about something you said earlier with one of the 60 asset categories, right? When we talk about real diversification, you added digital currencies or digital type of assets. What's your take on digital assets now? Because I know your previous partner, he's got some pretty tinfoil hat ideas about digital assets. What's your take on it?
Well, I'm not quite that crazy about digital currencies as he is, but when we first came out, I was very hesitant, and I told people there's tremendous volatility. Do not put any money you need to eat into
Mhm.
cryptocurrencies because it is volatile. And you've seen that back and forth. We've seen that in the last 6 months. But I did say digital currencies are here to stay.
Yeah,
So if you want to get into that industry, start investing in the companies that support the technology, the
right.
blockchain technology, things where people, those have to build to support this wave of cryptocurrency. So that was what I was saying for the first several years. In the last year, because of where I saw the Bitcoin went, and I'll speak about Bitcoin for now because I'm invested in Bitcoin, but Bitcoin went high and then it went way low. When it went way low, at the same time the economy was crazy, that's when I invested,
Mhm.
right? And so now it's back up here, and the pundits, not him. Some pundits say they think it's going to be 120,000 before the end of the second quarter. Others say it's going to be 200 by the end of the year. Who knows? I
Yeah,
mean, nobody has a crystal ball. But when you look at the history of the market and the levels and the pressure points, when you truly study it, and if you don't have time to educate yourself, find somebody who does, and find somebody who is a may not be the highest risk taker. That you don't want to do that either because you put your money on the line with them. Find somebody that's making reasoned decisions that allows them to benefit but also not lose your shirt.
yeah. It reminds me of when you're talking about that because there is a lot of emotion, especially around that topic, right? There's a lot of like polarizing views. But I remember even in early 2022, about the time I sold off almost all of mine when it hit up to about 65,000. It was interesting because I remember seeing a lot of people saying, "Oh, it's going to 500,000 by 2025, guaranteed. It's going to hit 500,000 or more, maybe even 1 million at that point, right?" And obviously, we're not even anywhere even close to that point at this juncture. So I do like the fact that there's a place for it, but don't try to get rich off of it, right? That's not the point of it.
A lot of people thought they were going to get rich. They poured a lot of money into it. They were going to ride the wave, and they lost their shirts. And then all of a sudden it came back. Well,
Yep.
too late. You sold low. And so
Right.
it's all about emotions. And that's one of the reasons why you need to have the resource that can talk you through something. And a great example is this beneficial ownership requirement last year. Talk about a roller coaster. First you have to do it, then you don't, then you do, then you don't, then you do. That was one of the things every single month I give my community. Well, as of now, you have to do it. Next month, as of now, you don't have to do it. So it's one of those things where you have to be plugged into a resource that's going to help you stay out of trouble and take advantage of opportunities as well.
Love it. What would be any final advice you give to anybody listening to this right now who's obviously on their journey? They're trying to get that financial independence. What would you advise them at this point?
Well, I like to start, everything's about your mindset. We
Mhm.
can control three things: our thoughts, our words, our actions, and it starts with your thoughts. And when it comes to money, the vast majority, I'd say 98% of us have scarcity mindsets because that's how we grew up. We grew up things like, I can't afford it. Pinch your pennies, save for a rainy day. So we grew up in this era of money negative, money negative. And so that creates this scarcity mindset. And we don't even we consciously don't realize it, but subconsciously we are being controlled by this fear that we're never going to have enough money. And then when you actually create some success, Chris, you're afraid you're going to lose it. And that is controlling a lot. Your thoughts control what you're saying. So instead of saying, I can't afford it, stop yourself, reframe. I teach people how to reframe their thoughts. Instead of saying, I can't afford it, say, how can I afford it? Because that triggers your subconscious to start working for you. And it triggers your entrepreneurial spirit. So you go from a negative thought process to a positive thought process, and your mind can only do one or the other. So stay away from the negative, reframe your thoughts into positivity, and that's when you become a magnet to money. That's when you start converting to an abundance mindset. So control your thoughts, your words, your actions, and remember that you are the CEO of your life. Whatever happened before, we are all where we are today because of the choices we made before today. If you want something different, something better, something more, just start making different choices today. And that choice may very well be change who you're listening to. Start focusing on what you can do to create a better tomorrow than today.
Great advice, Sharon. Thank you so much. I mean, I completely agree. It's the mindset is a big deal. We talk a lot about stewardship on this, right? Is that's the one abundance mindset around money versus spenders and savers that tend to operate in scarcity. Stewardship is the big thing because, like you were saying, you're a steward not just of your money, but a steward of your mind, your thoughts, your behaviors, as well as, of course, the things you actually do with that. So that's a critical point.
And as you become a steward of your money and you build that foundation, you get your time back so you can be more generous of heart and more
Yes.
generous of contribution. And that's where you truly can make a difference. And that's how you create your legacy. People say your legacy is what I leave behind. No,
Mhm.
it's not money. Your legacy is
Yeah.
created every single day with every heart you touch. And so as you create wealth in yourself and create generational wealth, you're getting back your time so that you can do even more. So you're giving of your heart as well as your wallet.
Well, you're basically leading to my final question I ask every guest on the show, which is this, Sharon, is obviously it's the Money Ripples podcast, and we talk about creating a ripple effect through people's lives. What do you feel is your ripple effect that you are here to do on this planet?
Well, thank you, Chris. Yes, until a couple of years ago, my purpose was to help people play a bigger game in their life, and that was
Mm,
either through their businesses or through their financial wherewithal. And a couple of years ago, my team said, Sharon, you really are you evolved from that. I don't talk about transition. I don't like that word. See how we reframe. It's not transition, it's evolve.
yeah.
And I evolved to the point where my legacy, in fact, is right here over my shoulder, right here, a little sign. My legacy is a legacy of creating legacies.
Mm,
My superpower, my purpose on life is to help other people create their future and help other people create their legacies. I love I do a high level one-on-one mentoring, and it's something that just gives me great joy to see somebody go from struggling in their business to being hugely successful to 10x, 100x their businesses. That's the greatest joy I have.
I love it. Well, Sharon, I appreciate you sharing with us, building continue your legacy on through us and creating that ripple effect on this show. Thank you so much for being here.
Well, thank you, Chris, and thanks for hosting this podcast. It's great. It's great for people to have access to your information.
Absolutely. Well, everybody, like she said, I mean, if you want to keep following her, obviously she's on social media, of course. We can put that in the show notes as well. But also be sure to check out sharonlechter.com /money dash talk. Check that out. if you want to sign up for that monthly webinar, which she's given up-to-date real-time information about what she's seeing with her vast experience in the markets and in investing and everything else. Great way to keep following her and allowing her legacy to also continue through you. So be sure to do that today. So in the meantime, guys, make it a wonderful and prosperous week, and we'll see you later.